to our second bullet point of the day, and you were talking about long-term thinking, right? I think that you have uncovered a statistic that proves out your long-term thinking that you shared on the tour.
This might be the statistic that I am most fired up to share in the history of JWB statistics.
Let's go.
So Pablo and I have thought a lot about why should somebody put their money with JWB versus our competitors out there. And our competitors think very differently about the markets that they're in. And when I say markets, almost without exception, everybody is in multiple markets or plans to be in multiple markets once they can justify it, right? JWB takes a very different approach. We are here in Jacksonville. We have no plans of going anywhere else. And because of that, we want to create opportunities here, and we're slightly limited by that approach, right? We have to be innovative. We have to innovate here because we don't have the ability to go to Sheboygan and all these other markets out there, right? So I was like, I know that when people put their money with me, I know that I have a really good chance of giving them more money back than if they gave their money to another one of my competitors. Hopefully you guys don't think that that's boastful or bragging. Hopefully you want me to think that, right? Because you want me to think that we can do better for you than others. But I was like, we talk a lot about the ability for us to innovate and to do some of these things that we've done, like bring new construction to the forefront here in Jacksonville. When we started in 2011, we started to build new construction. Nobody did any of that. Right? And then they put us on the front page of the Wall Street Journal, right? Same thing with townhomes, right? We started to build new construction townhomes as a way to bring more affordable, better returns and more density to this opportunity. And so we started to do that and have sold hundreds and hundreds of those, right? Well, I'm like, why should people put their money with me? And it just kind of hit me, I don't know, maybe a few weeks ago, 3 weeks ago, 4 weeks ago. I was like, you know what? I bet if I look at the neighborhoods that we put our clients in, so the same neighborhoods that I have my rental properties in, if we looked at those neighborhoods and we ran what was the appreciation rate just for JWB neighborhoods where we have scale, we've done new construction and townhomes and all of these things, that neighborhood in my estimation should perform better than what the average appreciation rate should be for the Jacksonville market. And I was like, yeah, I think that should be that way. Let me go to the data. And so I went to the data and we pulled the appreciation rates for our neighborhoods versus your typical Jacksonville neighborhood. And we did this since 2013 because a big part of the reason why you invest with JWB as a vertically integrated company is that we have scale in these neighborhoods. We started in 2006, right? I have over 300 of my own rental properties in these neighborhoods, but it takes time to get to that scale. And when you get to that scale, you now have the ability to kind of almost become, your actions can become more impactful in those neighborhoods, right? When you have built or renovated 500 homes in a neighborhood, you have the ability to take the worst homes on those streets, right? The worst streets, and have them turn into the best streets. And it doesn't take very long for that to change the face of a neighborhood. And so from 2013 on, that's when I looked at it and I said, well, that's when we really achieved scale in our 4 neighborhoods. So without further ado, JWB neighborhoods have appreciated 79% more than the average Jacksonville neighborhood has appreciated since 2013. 79%.
Let's go.
And what do you think Jacksonville has done compared to the national average since 2013?
I'd say good to quite good.
Yeah, we've appreciated almost double what the average historical rate is in Jacksonville. That's just the baseline.
Yeah.
And 79% higher than that baseline is what JWB investors have experienced. And so the cool thing, as I'm thinking about this though, is we didn't really know we were a vertically integrated company since 2013.
Yeah.
Right?
Yeah.
Like we started our property management company in 2010, right? We achieved a certain level of scale in 2013. Then we started to layer on new construction, right? Then we started to layer on some of these other opportunities. We have known that we're a vertically integrated company and have thought and brought strategy and taken on innovative approaches a lot in the last few years. So I look at the 79% metric and I think of that as that's historical, right? Now that we know the value and we are committed, we have our own innovation department here, which we can talk about what that really means. I expect for us to have more of a positive impact than what somebody would typically get in the Jacksonville market over the next 10 years versus what we have done for the last roughly 10 years. So I'm super excited, man.
Dude, that's high five. That's really cool. That's a great find. That's an unbelievable accomplishment. A couple things come to mind, right? So I don't want to take too much credit here, but I think I coined the vertical integration thing.
You helped me see a lot.
And to me, what I was seeing is when we talked about vertical integration, we were talking about like not turnkey, turnkey, vertical integration. And to me, the big thing, the giant moat that you can draw around what JWB does versus any other of the greatest turnkey providers in the country is the ability to improve the economics of the property from outside the property line, right? And as you describe this idea of vertical integration and these data points, because you've achieved scales in these neighborhoods, what I think of is I think about a bullseye, right? And I think of you just like putting bets all around the bullseye. And as you get closer and closer to like the more, as you grow density around it, then that network effect of positive value starts to happen. And when I look at the spread of your neighborhoods, I see a big dartboard right here, a big dartboard right here, a dartboard here, and a dartboard here. And what I see is that you've done all these individual bullseyes, let's say intuitively.
Right.
And now you're seeing a real bullseye in the middle of all of that stuff.
Absolutely.
Which you already have these bets around and you've gone all in on that bullseye, right?
Wow.
And that obviously what we're talking about is downtown, right? Yeah. So when you say this and you bring up these data points, it just hits home. It hits a bullseye for me.
Yeah. Well, it's the iterations that you have as a company. Every time you iterate, you probably get a lot better if you're a company that's growing, right? Your next iteration of whatever you're accomplishing, your next iteration of innovation should be hopefully more impactful than the last one.
Yeah.
And we get a lot of questions about why are we going downtown? Why in the last 2 years have we acquired the equivalent of 19 city blocks? Why are we now moving our offices downtown? Like, why are we doing this? And what I tell people is, like, we're not doing this to earn a return on investment on those buildings anytime soon. We're doing this because this is just the latest iteration of our innovation department of a vertically integrated company. And that's why we are the only vertically integrated company that focuses on single family rental properties here in the US. It's because there are other companies that have property management and acquisitions and construction in-house, but there's not another company that I'm aware of that has innovation departments. It has an innovation department in their office, right? That focuses on one market so that you can have 10 times the impact versus going to 10 markets and having one time the impact there. And that's the exciting thing about this downtown opportunity. It is something that all of our clients can benefit from. It's just not easy to go downtown and buy a building, right? There's a lot of cost and risk, and you have to work on city incentives to figure out how to navigate that. And none of you guys want to do any of that, right? JWB gets to do that. We're using our own money there. That's important because we're going to be there in the long haul. We're not raising money from others so that we would have to sell prematurely. We're doing it with our own money. And then everybody can leverage that. Everybody can access that through purchasing single family rental properties in those neighborhoods that we've been at since 2006. So this very much to me, is the greatest opportunity for you to ride the coattails of a real estate insider or a market mover, right? Much like people want to invest with Warren Buffett because he is the single greatest stock investor of all time. And that's why you invest in Berkshire Hathaway stock. And that's why it's the most expensive stock in the world. It's because when he says something good's going to happen in the stock market world, it happens. Well, we're not at that level. But in Jacksonville, JWB has a similar opportunity, right? Where we go over the last, since 2013, 79% more home price appreciation. There's a real reason for that. Right. And now as we go into downtown, you think about what neighborhoods are going to benefit the most from there, you can make an argument that the impact there should be even higher.
I'm going to go there, man. In local real estate, there's institutions like in Florida, we have this awesome supermarket chain called Publix. And people know that if a Publix is going in, their real estate department has done the due diligence. Ergo, I'm going to invest there and I'm going to value a little bit more. And I've heard from people on the show that they're like, when JWB is buying somewhere, I'm going to buy there. I'm going to go there too, right? So like this idea that you can lead the charge and it can become, it's tempting to call it a self-fulfilling prophecy, but I just think it's knowing it first and then having people recognize that you have the track record of knowing it first. And that creates the flywheel effect that then generates even more positive outcomes.
Listen, I don't know if we're going to have 79% more home price appreciation in our neighborhoods over the next 10 years. That's really hard to do. So I'm not going to say that we're going to do that, but I feel really confident that when you invest where we put you, with all of the ancillary things that go on between JWB investments and our ability to make sure that we are in a place where you can not only hit your returns today, but probably better. I'm really confident that we're going to outperform the Jacksonville market.
Outperform the market, correct.
And that really matters because Jacksonville's already a growth market, which means Jacksonville's market's outperforming the other cash flow markets that you may be considering.